Everybody, we are Monday the 13th
DXY
of March
value.
2023, and what a 4 or 5 days it has been over the weekend, and closing out last week on the Silicon Valley Bank banking crisis. So of course the Fed coming out last minute, 15 minutes into the reopen on futures last night, saying that they will backstop all depositors in the US, but it's a little too late for Silicon Valley Bank, which were closed by the FDIC on Friday, never to trade again. And we are seeing a continual unwind in stocks. Now, a lot of people saying, well, hold on a second. The sorry, hold on a second. I just got to switch my headphones here. It's always the way. Tech let me down here. Okay. So, of course, a little too late for Silicon Valley Bank, who had already liquidated a lot of their treasuries. Now, what has the Fed come out? Well, they've said, or the Fed in the US have said, well, we're gonna backstop all deposits in US banks above the FDIC insurance of 250,000 per account. So they have a $25 billion facility to do this. Okay, and but it's just a little too early. Sorry, it's just a little too late for Silicon Valley Bank to essentially avail of that, because I mean the depositors will be fine, but Silicon Valley Bank have gone to the wall after already selling their treasuries. Now, what else have has the Fed said? Well, they said that they will allow these banks to mark their treasury and mortgage-backed security assets on their books, to mark them at par, which means that they will allow them to mark them at the value that they paid for them way back when. Okay, rather than mark them to market, which would show them as being only worth 60 cents on the dollar right now. So if anyone has any questions about this, do feel free to jump in the room, the Duggan Capital room, or send me an email, tim@duggancapital.com. And yeah, so really, that's the shell of what's happened, closing out last week and reopening on trade last night, and it's indeed this morning in Europe right now. Okay, that's kind of encapsulating all of that. So a lot of people are, Goldman Sachs right now are saying, well, this is going to motivate the Fed to actually pause on the rate hikes and not do any more for the rest of the year. Why do I think that's absolutely crazy? Well, I think because this storm is in a teacup, but let's say it's not in a teacup. Let's just focus on what Jerome Powell has said all the way through the rate hiking cycle, is that, they are not going to flinch here. And I don't think that this SVB crisis is enough to motivate them to flinch. And so I think we're going to come to the next meeting and they are going to hike at the next meeting. I think they're going to go for 50 basis points, and they have inflation on the ropes now. This bank facility that they put in place for 25 billion, allowing the banks to mark their treasury assets at par, is in itself a little bit inflationary. So they're giving a little bit of inflationary tone QE. It's sort of a small form of QE. All right, they're putting a little form of QE out there, which means that they're just going to have to be even more aggressive on their rate hike cycle stance. So let's take Silicon Valley Bank crisis off the table. What was our thinking coming into the NFP on Friday, which seems like it happened 5 years ago at this point? But our stance was, if the jobs came out as a beat, that this would feed into a more hawkish Fed, and that we would go down on the markets. And we may see an initial bid come in, but that would fail and we would put in new lows. NFP came out at a beat, and then we started to go down. Then we saw the Silicon Valley Bank issue unravel. And so it's really hard. I think there's the fog of war here, right? Whereby it's very hard to kind of tell the impact of NFP last Friday, essentially, because of this Silicon Valley Bank situation. So a lot of people are thinking, wow, okay, the Fed's come in, backstop. All right, equities are going to rally off the open. Well, we got a gap up on the electronic overnight last night, but we are well below that now. We were up 0.75 on the DAX. We're now negative 1.3. Let me show you the S&P here. All right, here's the S&P. We have essentially come back to pretty much the opening price below here. We're still, yeah, we're the chart times we're still kind of down here though, even though we're showing positive on the gains on the day. My chart times I think are a little screwed up here on the day changes. But that doesn't really matter. What's happened here is a classic risk off move has continued. So this is just a continuation of what was in the hopper on Friday, which was bonds up, breaking the positive correlation that they have with equities, and stocks down. Okay. What we've been seeing all the way through pre Silicon Valley Bank situation has been positive correlation between on stocks to bonds. Stocks down, bonds down. Stocks up, bonds up. Okay. That is now broken. That's now broken because we are now pricing in banking risk and systemic risk. Even though the Fed has come in with a 25 billion facility here, I don't think it's enough, actually. And until we get a confirmed buyer or someone who's going to take on the Silicon Valley Bank loan book in the US, HSBC have already done this in the UK arm, but we need someone for the holding entity in the US to come in, and they'll then probably take the Asian arm as well. Until we get that, we are going to be bid on bonds and sold down on equities because we do have systemic risk. And actually, I think we're going to be bid up on bonds. I think equities are trading on the back of the strong jobs beat on Friday, and that is feeding into a more hawkish Fed. I think Goldman Sachs are smoking crack, and we are definitely going to have a continuation of the rate hike cycle through the next meeting. Of course, we are not without drama here on these markets. So we have CPIs coming out tomorrow. But, myself and a couple of the guys talking about this tomorrow, I mean, for the Fed to pause rate hikes, they're going to want to see like a massive miss on CPIs tomorrow. And even at that, they're going to go, well, let's see how the next one goes. So I don't think the Fed are going to flinch at all. And I think this is just setting up for the next FOMC meeting for basically no one to have a clue what's going to happen. And if you ask me, if I was a gambling man, which I am, it's going to be at least 50 basis point hike on the next FOMC meeting. Okay. So, we've been really busy. So I haven't been streaming live here from 8 a.m. this morning. We've just been really busy late last night on the reopen on trade, and then Eurex reopen on trade, and getting very little sleep, but loving this action. And we are short DAX here at Duggan Capital for the last week, and loving this, and some really, really nice trades. And I am not for turning on these shorts at all until even if CPIs came in a small miss tomorrow, which would be dovish. I still think these markets are going to continue down in the bear trend, and that's the way it is. Anyway, that's another story. So trying to pick the bottom here. Oh well, unfortunately, you know what they say about traders who try to pick bottoms. They get left with smelly fingers. So, all right, we are. What are we doing here on the bonds? Bond up 1.4. T-notes up a lesser extent 0.7. On the bonds, it was kind of an interesting picture because essentially I thought, okay, well, I was short the bonds on the reopen on trade last night around here, and got stopped out when it came back up here because my view was, well, hold on, if the Treasury are essentially backstopping these depositors, well, then we need to unwind all of Friday. We need to unwind all of this, right? All of this, and be trading back down here. And we have not been doing that. Right. So it's quite easy to come in and look for the imbalance long to come in here, and boom, we're out of this trade now. And I'm looking to rebuy something like a 134.28, a little short condition shift, and then for that shift to fail and then remain imbalanced up. But probably won't get that trade. Would I like a short? I'm going to have to see that buyer come in for the US arm of Silicon Valley Bank and the parent company. I think it's going to be either Morgan Stanley or Goldman Sachs. If you're thinking Jeff Bezos or Elon Musk are going to buy it, you're also smoking crack, because the banking regulator is not going to let Elon Musk anywhere near a banking license, given his history with the SEC. And Jeff Bezos probably is not going to pass muster either with the banking regulator, because then you're into sort of people, Senate would be calling on this as being dangerous for US security interests and blah blah blah. You're going to need a buyer who can just fold this book of business in like within a week, all right, and who is in this business already, not some billionaire playboy. So we remain bid on the bonds. Oil, it's getting dragged into the muck here. I actually like these longs on 76s. We might take a little piece of this action right now, just to see. Not big size. Let's just see what we get. Gold remaining bid, holding on the gap up here as well. We're up 1.25. Yeah, I think gold can continue to appreciate here. Well, actually, instead of looking at the 30-minute, let's just look at the dailies here on gold. I think 1943 is definite upside target on gold today. And let's see if there's more in it for the week. But here is, it's cable. Yeah, I think cable will continue to well, actually, I don't like commenting on cable here. But gold on the daily, we're hitting into that 1895 spot 8. So I think we can continue up a wee bit here. I'm not a massive gold bug these days. I used to be on this on the regular, but just lost my appetite for it. DAX running new lows here. Running new lows. Nothing coming across on the squawk so far. Bond crushing the highs. Okay, all right. You're seeing U.S. equities now breaking big time. I am took a 10-tick stop there on oil as it breached here. Obviously, something's come across here. We don't have any meaningful data coming out on the schedule, economic calendars today, guys. So, I mean, look, on Thursday we were thinking this is going to be one of the quietest days of the week, but definitely not. Definitely not. Okay. What else are we looking at here? VIX. We can't go anywhere without talking about VIX. Okay, so we did this analysis last night, guys. Remember this? It said we'd come back down to P-Val area and maybe 22 quarters.
Oil value.
Find support. Well, I found support on P-Val, and look at what we're doing now. We are up 4% on the VIX already, and it's we haven't even had second breakfast. So targets up 2740s for me on the VIX. This is a 30-minute chart. This is the daily chart. And target's going to be here. About 2724 is in around there. So we have, look at that. That's IPB long Y+1 there. Look at that, guys. This is exactly what we were talking about. And that's why we were looking for that area on the 30 minutes to come into play last night. I mean, I know it's a busy chart, but the guys
German
in the
two-year
team
bond
here
yield
know what I'm
set for the
talking
largest
about.
drop on record.
So what was that largest drop on record? This is the yields dropping. Is that right? Is this the largest yields drop on record? Is that right? Yeah. So all right, this is definitely not an emergency, guys. This is kind of a once every 20 years type of price action going on here. Now, if you're trying to buy the dip on these assets, you ain't seen nothing yet. All right, let me just echo that you have not seen anything yet.
Brent crude oil futures fall over $1 to $81.56 a barrel, and US crude oil futures fall over $1 to $75 and.
The week is young. All right, the week is young. Okay, so look, I think let's have this serve as a pre-US here as well. We're going to be going through a detailed Duggan Capital team call at 1:45 as usual to get the really good insight on these markets. I think we've just about to trade MPVH on Bund. I may look for 136.47s for the short. Probably not. As I said earlier, and I got out of this long. I wanted to be catching another long rather than trying to flip on this thing, because there is no knowing how far this is going to go. No knowing. Okay, and at the moment you're getting a huge amount of the market offside on that gap up reopen. Let's say on just SPOOs, the whole market here is just mother and father along this thing, and guess what? They're feeling a bit seasick right now, so they're reaching for the in-flight puke bag here. We get down to Friday's lows, you're going to have massive puking going on here, stopping out below this low. Man, here's your target, 3,800. And you know what? I think we're going lower, a lot lower. Okay. So yeah, I'm stoking the fears here. I don't care. All right. What else do we need to cover here? Currencies. I think the dollar has finally found the footing. Yeah, so this is interesting. All right. On the Dixie, I think the Dixie is going to have to start to price in a lot of this risk here. I think we've been under a pullback to the 103 spot 82s, and I think we're going higher on the dollar over the course of the rest of this year. So this has just been a pullback to buy on Dixie 103 spot 82s. Watch this thing fly. I think the euro is actually probably going to get crushed here over the rest of the year. I think you're going to see euro below the 105, 1.05s, potentially this week. But saying that, I'm going to pull back these calls until we get Christine Lagarde and the ECB rate hike on Thursday. So the drama continues here in the playground. All right, the drama continues. All right, these are serious moves going on in these markets, and I think we're only seeing the very little start of them right now. Oil trading through the lows here. Yeah, equities are going to drag oil down to the floor here. I mean, I'm not even bothering looking at oil, to be honest, today. Way too much going on with bonds and equities.
DXY value.
So as you can see here, this is the daily bar in the DAX. So we've been swinging this thing here short off of the high of last week. We tried it the week before. We tried it a couple of weeks ago here, and as you can see, it kind of just came back up. So nice opportunity to retake the swing here on the 15704s. And down she goes. So myself and Parwiz are targeting, what are we targeting? 13,800s here. 13,800s, the pre-COVID high, let's call it. And you know what? I think we're going lower. Now, that's not for today. I don't think we're going to do 13,800s today. I mean, it'd be amazing if we do, but I don't see. I've already taken scales here now on Q minus half. So I'm willing to resell into this thing here. I'm going to certainly take some of these take profits off because it's just crushed. But wow, YPVH coming up here, guys. I mean, it's this massive stuff going on. We're down 2.4 on DAX. Boom. Okay, so I've just taken 30% of the whole clip out on this push down today. It's hitting off a YPVAH, guys. So I mean, like, you know, you got I have to be taking scales here, but I am not thinking about buying this thing at all. If this thing bounces 2% from here, I don't care. I'm going to probably look for a resell tomorrow with CPIs. So I'll sell pops tomorrow, to be honest. May short the bond here. Don't know. Now we're nearly there. This has been a hell of a push, to be honest now. Monthly PVAH trading on bond, 136.38. Okay, so this has been a nice little opportunity to get live, get a recording distributed across for people to kind of understand what's going on, and hopefully not be getting caught with their pants down trying to buy this dip. I think there will be dip buying opportunities, just not now. Just not now. Okay, we need to stay mindful that bonds will stay risk off like this until we probably get a buyer for North American Silicon Valley Bank. So you know, stocks. This is just the start, if you ask me. It's just the start. Okay, so we got. The speed, yeah, the speed. I mean, the speed is always the best thing about these sell-offs because you know, you just find yourself, you know, 2% down, like super fast, like 30 within like 10 minutes, or you know, and then you kind of get a bit of a break, and then it's just like goes again because people are trying to buy dips, right? People are just trying to buy dips at all the levels all the way down. You know, people have got levels all over the place, but they're not good levels, right? They're not good levels, and they're not good areas contextually or conditionally to be buyers. And they get in a little bit of a bounce, then the market pressures down to their entry, it makes them puke, and then we run through new lows. So look, I think we've done a pretty decent move here already. I think the market may take a breather here. So you may see equities just take a little bit of a relief rally, small and slow, and I'm short buns here to kind of get on with that. And you know, yeah. So, all right. If anyone has any questions, feel free to chat me here on the platforms that you're on: Twitch, YouTube, LinkedIn, Facebook. Hope everyone's doing well this morning. Stocks may take a little piece on stocks here. Yeah, 4090s. Might have even had a target in there. Oh, here come the bonds again. Certainly attempting something anyway. They're repricing the terminal rate for ECB here at 3.75. All right. Peak rate. What was it? 4? Was it 4? Sweden's biggest pension fault is a Bloomberg here. At a crisis meeting early on Monday to discuss why it had invested $2 billion in niche US banks caught up in the collapse of Silicon Valley Bank over the past 6 years. Alecta allocated 21.8 billion kroner, which is $2.1 billion of its funds to Signature Bank and First Republic Bank. By the way, First Republic Bank, boys and girls, is down heavy here on the pre. Was down about 40%. Here it is on the pre. Oh Jesus, it was down 67% actually. Now it's down 49%. Holy shit! So this really made another low here after we looked at it down 40%. Yeah, it was here and then pushed to negative 65. It's now currently negative, say 50% on the pre. So okay, all right. Risk may not be over yet. Yeah, so this is why we remain risk off here, because there is contagion on both sides of the water. So it looks like now the ECB are going to have to get involved with a statement and a backstop. According to a spokesperson, Jacob Laptis, the investments placed the Swedish pension giant among the bank's largest shareholders. A pension fund founded in 1917 and managed the money of a 2.6 million private savers in Sweden would wager such a significant bet on the sector has raised eyebrows within the country's financial community and sparked outrage on social media from the outside. Alecta's decisions look very strange. Founder from Jacob Bornold. Okay. Either which way, Sweden is getting dragged into the muck here with SVB. Yeah. All right. So that's going to certainly feed into the risk off tone here. All right, so we're going to just close off this live stream here, guys and girls. If you want to be on these market moves, if you want to be able to trade these moves effectively, if you want to be able to swing trade these moves and learn how to trade properly, do get in touch, duggancapital.com. Send me an email, tim@duggancapital, or the team at hello@duggancapital. And yeah, look, I think we're going to have a hell of a week, guys. Think this is going to be a crazy week. All right, so just be careful out here. Don't go buying the dips. If you are buying dips, get your money out of the thing quickly. Operate fast. This is not financial advice. There you go, Van Deep Long Dax. Yeah, get your money fast. What's your target? All right, I'm going to cut the public stream here, guys and girls. Okay. Have a good session, and we'll be talking to you through the week, guys and girls. All right. Be good.
Apollo 11, this is Houston. You are confirmed to go for orbit. Roger.